Welcome everybody to today's session. So let's start up our software. Okay, so we'll do something different today. Let's bring this here over to the big screen. We will do a new simulation. We'll start a new simulation and we will do some scalping. Now let's scalp on the Euro US dollar. We'll add that one to the list. And the date, December. So December is usually a bit slow. Let's maybe skip forward to the next year. Let's do February. Start here on the 1st. All right. Perfect time zone. We are in New York. Let's put this to Eastern time. Commission 1. So our commissions with CPP trading are usually very low. We only pay about $1-2 per lot. Let's put this to 2. And spread we have to adjust as well. We getting 0 pips on the Euro USD. Excellent. So we got all our settings done. We will start on February 1st, 2023, and only focus on one pair. Beautiful. Now let's get our chart set up here. As usual, we want to load our settings, and we have it right here in our templates. We use color on black. Okay, so we need to know where we are in terms of the different sessions. Now we're still looking at the Sydney Tokyo session. So let's start pre-London. Let's focus on pre-London, maybe 2 hours or so before the London Open. That would be a good idea. All right, so we'll skip forward. Since we're scalping, we're only going to be looking, mainly we'll be looking at the 1 minute and 5 minute. We may take a look on the 15-minute time frames, but we won't spend much time on the 1 hour or 4 hour time frame. All right, let's skip forward here so we get a little bit closer. And let's see what's going on. Now, if we take a look on the 15 minutes, on the 15-minute time frame, if I do a top-down analysis, let's put our session map up there. If we do a top-down analysis, you can see that price is starting to head up to 108. So we are getting close to a potential resistance. We had a very large move up already, bit of a small pullback there, which is good. Let's take a look on the 15-minute. Now the 15-minute is starting to reject. Again, we had a big move up. Now this is going to be a level of interest here. And yeah, we have to wait. So potentially we can take a buy if price comes down. Let's see if we don't have our arrow. Let's add this. We want our arrow here, arrow line. Let's put this up. Perfect. Just have to do our settings here. Let's change this to, let's say, yellow or white. Let's do white. Take a line. Okay. So if price is coming down, I can zoom in here so we can see this a little bit better. If price is coming down to this area, we can potentially, market can potentially reject the move up, or if it's breaking below, we can take a sell. Now I have a nice range for price to move down. Beautiful range here. Now if price is moving up, since we have a strong rejection, I'll only be interested in maybe a retest of this high. So I could be looking at somewhere in this area. And that's what we see on the 5 minute. Take a look on the 1 minute. On the 1 minute, yeah, we need some more information. We need to wait for some more candles. Let's maybe skip here forward a candle. Okay, so price has come through. We can go back to the 1 minute. Maybe speed up the time here a little bit. So 3 times the live speed. Let's wait and see. We had a small gap there. It has been filled. You can see price is now below this zone. And with price being below the zone, we still have to wait. There's not much we can do at this point because we either need a solid rejection here in order to go long. We kind of already have missed out on a sell. I'm not taking a sell because price already moved down a lot here. So we already had a big move down. And if we look again on the 15-minute, we had a previous resistance turning into support. So we are just at that area here. Let's see what's going on the 1 minute. So the 1 minute is starting to move up again. Now if we remove those lines, let's look at this. Okay, we probably have missed this move now. Yeah, we have to accept that we missed this move. We could have gotten in here. Stop would have been very tight. We don't have that many pips. So we'll likely wait for another opportunity because price has just moved too much. Yeah, we only have about 2.5 pips, so that's not a lot. So it's better for us to wait. Yeah, let's wait for another opportunity. 5 minutes. Because it's going to be risky anticipating a bigger move up because we had this big rejection here in the 5 minute. Now the 5 minute has closed nicely bullish. You can see this nice rejection, but we still have this previous rejection there. So what we can do is now let's just skip forward a little bit. Let's go a few more candles forward. We can just speed up the time. That's the benefit of using the simulator. We can just speed up the time. All right, so we're 15 times to real market speed. If it's breaking above, we can see if our analysis was correct because price should continue up. If it's breaking above here like it does right now, it should move up to 108. But we are not interested in taking a buy now, so we will just wait for something else to happen. Let's see what else the market is going to do because we want to focus on high probability opportunities. You see we get a lot of momentum here up. Okay, that's what we saw on the 1 minute. If we go back to the 1 minute time frame, let's zoom in here a little bit. Move that out of the way. Okay. It's one of those times where we have to be patient. We really have to wait because price has moved already a lot. Here we already had a big move, and if it's coming back down, we could maybe anticipate a similar move again to reject on here and continue up, retest this high. But it's not enough pips. We need to get more than 2 or 3 pips. We definitely need a little bit more of a range in order for this to be worth it, because we still have to cover, we don't have a spread here, but we still have to cover our commissions. And okay, let's slow this down here. Okay, so price now is starting to move down again. So what we can do is we will mark this level again. We'll mark our 108 resistance. If we see how many pips we have here, we're looking at still only 2 pips. We have to wait. We want something a bit more promising. We have a beautiful range down here. If price is starting to move down and it's breaking below, we have a nice opportunity to take a sell there. Potential range in here. Or price is just going to continue ranging up between those 2 levels. And if you take a look on the 15 minute, the 15 minute is actually rejecting. You can see we are in this zone here. 50-minute time frame is rejecting. But if we're breaking again down below 108, it could be a good opportunity to go short. So we'll keep that in mind. So I'll focus on this on the 1 minute. We're still running a little bit at an increased speed just for the time to pass by, because in the live market you have to be patient. You need to know when to stay out. I mean, this is actually a nice buying opportunity here, but we're not taking this because we don't have a lot of range. If we can break above here again, we got a nice opportunity to go up to 1087. Would have to start moving bullish again. See another rejection candle. As soon as it's breaking the high here, this will be a nice buy. But we only have, I like to looking again, only about two. It's even less than 2 pips. So this is not, it's not worth for us taking this trade. You always have to know when to stay out. It's more important to know when to stay out because it's very tempting, or a big move. Got some volume coming in here. So we're also getting closer to the London Open. So the London Open is coming up, or gapped up. Market is starting to gap up. Let's see. So this now we could bring down to this level. All right, we're starting to reject. Okay, let's put this down to the live speed. All right, so we have a rejection candle, big rejection candle. And we have a little bit more range now, which is good. That's what we would need. If we're taking a sell, our stop would have to be above this rejection candle. We're looking at a 1-to-1 ratio. We could look at this resistance turning the support, potentially move back down to this level. So we'll keep it on here for now. We can skip forward to the next candle here. Let's skip one more. So you get another rejection candle. I'd like to see at least one candle closing bearish. All right, so we have a big bear candle now. Now this would mean if the next one is continuing down here, we'll take a sell. And let's use a fixed percentage. Let's use a percentage risk. So let's do 0.5%. We'll use 0.5% visual mode. And I'm going to place a sell stop. Use a sell stop. Because you see we have a small gap there. And now we need, this is going to be our entry. Our stop will be above this candle. And our take profit will be, say, down here, the 1-to-1. All right. So we're only getting filled if price is actually breaking the low of this bear candle. So we had a lot of rejections. I mean, we could actually now, since price is moving up, we could scale in, but we won't do that now. We will focus, we'll wait until we have that clear confirmation. Speed this up a little bit. You can see price is just hovering around this previous resistance. You know, it's now acting a little bit as a support. You can see how price has reacted to this level before, and now it's reacting to it again. But at the same time, this means that if it's breaking below, if you're starting to break below here, this is a nice opportunity to go short. It's going to be unlikely that this will continue up. You have a lot of rejection candles. Still, this gap is going to be filled. Okay, price starting to move down. This looks interesting now. So we're not getting in this trade unless your price is breaking below. Now it has gapped down, so this can potentially move up again. Let's see, it's staying. Okay, let's secure some profits. We are in this trade. We are approaching that level. And let's close a portion here. Partial close. Let's close 80%. Let's do 90%. We'll close 90%. And we'll remove our take profit. Move our stop to break even. Perfect. See, now we are in the sell still. We have a small runner open, and if this continues down, we can get some additional pips. We're exactly at the 1-to-1 ratio. Price has moved exactly to how we anticipated it. And now the question is just, will we see a retest? Will price move back up again before it will continue down? Or will it have enough momentum to immediately move down? That's something we cannot know in advance. But that's why we secured 80–90% of our position. Because you can also see, obviously before we had this resistance level here, price has reacted to this zone previously, and it's very, very likely that when price is getting to that level again, it will react again. Okay, so now it's coming down. We are at a 2-to-1 ratio. We're getting to a little bit of a support area here. We have lots of rejections on the 5-minute. Now we have a lot of rejections on the 5-minute. Let's maybe take a quick look on the 15-minute. 15-minute is rejecting a lot. Look at this log trick on the 15-minute time frame. So the 15-minute is actually indicating that there can be a lot of move, a lot of volume here coming in. You know, we're still getting closer to the London Open. We had a big move. We already had a couple of candles rejecting, so the bulls are getting weaker. With that being said, we'll leave this one open. We'll still leave this trade open. We'll keep an eye on it on the lower time frames. If it's coming back up to our entry, we'll definitely obviously get out here. But we can even trail our stop now because it shouldn't break the high of this candle. And on the big picture, see, this is our resistance we had from before. The resistance here to the left. We had price reacting to it again. Then we had this breakthrough. So we're anticipating that we'll move down to 1087. Very predictable. Now, so far, this looks very good, very promising. And we'll add our take profit to this level here. And let's see what's going to happen. We can even trail our stop loss as well in case we get a big spike up. So our stop is going to be moved to above the high. Where did our stop go? Above the high of this candle. That's the minimum. And manually, if it's starting to break above here, we can always get out sooner. See a small gap down here on the 1 minute. Still on the 5-minute. 5-minute still open. Very, very big bear close. As you can see, very nice bear close. Starting to move up, but this can be a retest now. So we're not too worried about this move up. See, it moved up beautifully. It's moving up, tapping into this area. Should obviously stay below. That's why we have put our stop above the high of this bear candle, because the market has no business breaking above 108.735 again. So now it's really about being patient. You have to wait. We should anticipate this to continue down, should reach our take profit level, and then depending on how much momentum there is, price can continue lower down. I mean, the next level would be here. After that, let's look on the 5-minute. Yeah, this actually aligns perfectly with the 5-minute. See, we have resistance, support. This would be the next target, and we have gotten filled. All right, so we got filled on this sell. This was our first trade. We had to be a bit patient. We weren't able to capture anything earlier on, but it paid off to wait. As it always does in the market, it pays to wait. So we took a sell. Now I'm not interested in taking another sell because this has been an extended move. Likely we will see a little bit of a consolidation. That's something we could be interested in. And I'll just do a fresh analysis, get rid of all those levels. See that a big move down on the 5-minute. I'm not really looking at taking a buy now. because I mean, if we're taking a buy, it could look at a retest of this high, but on the 15-minute we had a big rejection. That's the issue. See, on the 50-minute we have a big rejection. So we need to have a close. We need to break above here before we can even think about taking a buy. So that's something we would need to see on the 5-minute and on the 1-minute. And 5-minute is moving down, depending on how strong or how weak the bears are. It will bounce off this support. This is something we should be able to see on the 1-minute. You can actually just skip forward a few candles. Now let's just skip forward on the few candles on the 1-minute. Okay, 1-minute is breaking below. Still below. Looks like it's not continuing much more. It's rejecting. It's rejecting strongly. Okay. Now we can take a buy because this is a potential resistance, but I will be interested in maybe taking a buy somewhere up there, depending on how this moves. All right, so now we have a candle that has closed again above 108.694. If we go back to the 5-minute, strong rejection candle. We have an area of interest, used to be resistance. We had a fake out to the downside here. Bulls push price up again. Now it's rejecting once more. We already have a candle moving bullish. If we're starting to break the high of this rejection candle, this could be a good opportunity to anticipate a retest of this high. Now I did say previously that on the 15-minute we had a big rejection. Price should break above 108.73, but because of how this looks on the 5-minute, this is a very nice range. So we can justify taking an entry a little bit earlier if you have a plan, we know how to manage this position. So I'm executing this one on the 5-minute. I'll place a buy stop. This time it's going to be here, buy stop. Obviously this would be a bit different in the live market because it's just trading. Don't have to explain everything, but this is why we're using this software. We're using the simulator so we can pause it, really talk about and analyze the setup and see what's going on. So our stop goes below the low of this wick. Our entry is going to be just slightly above this high. We can make sure price actually breaks above. Take profit is at this high. And there we go. All right. Now it's waiting time again. Now we have to wait, because if price is not breaking the high of this rejection candle, there will be no trade. Now, if we are getting filled and I see the price is moving up and it's starting to reject and it's starting to move down again, then I can manage risk if it's breaking below those levels again. So we're going to move our stop. We will be able to trim our stop up. So the next area will be from down here below this wick. We'll move it up to below the low of this candle. That's likely going to be a bullish candle by the time it's closed. So the time is 1:57. We have about 2 minutes, 20 seconds, 10 seconds left. We need to wait for this 5-minute to close. If this 5-minute is closing bearish, if this 5-minute is closing bearish below here, then we will delete our buy stop and we will not be taking this trade. So you can look at this on the 1-minute. See, this a very nice strong rejection candle we have on the 1-minute. Now this looks like it's going to be a higher low, which would be ideal. If that's going to be the case, we need to see a candle closing bullish before we can make that call. Let's remove some of those lines. Okay, there are lots of lines here, but every line has a purpose, and it's here as a visual guide. Okay, price starting to move bullish, as you can see, but we need a candle closing actually bullish. Okay, nice close. You can see this is a higher low now. If you're now getting filled, I can immediately move the stop to below this higher low. So we're already reducing our overall risk, meaning if we do get stopped out, instead of losing 0.5%, we're only losing around 0.3%, 0.3, 0.4%. But we need to get filled. See, price is still below this high. If it's not breaking above, if this is coming back down and it's starting to break below this low, then this entire setup is becoming invalid. So it's very important to wait for the right entry. So very important to wait. You can switch back and forth between the time frames. And the 5 minute is closed bullish, which is good. That's a good sign. See 5 minutes starting to move up again. We have this nice opportunity for price to continue bullish. All right, now we are in a trade. We have gotten filled. Now it's time to move our stop. Stop loss, delete, add a new stop loss. We'll move this up. It should now respect the low of this current candle. See, now we're only risking $28 instead of 50. We've been risking 0.5% on a $10,000 account. So we're only risking $28 if you get stopped out. And now it's the same thing again. We have to wait. I need to see how this candle is closing because this candle should close bullish. Here on the 5 minute. See, it's 354. So this is a little bit more than just a quick scalp. I mean, it's still on the 5 minute time frame, but we have a bigger range, a bigger area, which means there's a more opportunity for price to move up close to 6 pips. We would like to see a close above this yellow line because that means if it's closing above, or at least it's breaking the high of this bear candle here, then we have confirmation that the bulls have enough momentum to retest this high. That's the idea here. You can see price needs to break above there. If this is coming down again and we get a bear close, we have to interfere, we have to manage risk. But so far this looks promising. Let's see on the 1 minute. Let's switch to the 1 minute. So in the 1 minute we have an extended move up. We are approaching. And now is the question, do you want to stay in this trade or you want to start securing some profits? Because this candle is lacking a lower wick and a small gap there. This candle, all those candles have no lower wicks except this one. Big move up, so we likely will see a bit of a retracement. The retracement is only small down to here. There's not going to be an issue, but if this is starting to move down and retest this resistance, turn it into support, then it would mean we have to accept that this trade is from a profit now going down to break even or potentially even a small drawdown, which is something we'd like to avoid. So because of that, we'll close 50%. So now this time only closing 50%. This is a little bit different with scalping, especially with small ranges with not as many pips to aim for on the Euro USD, but there are a lot of opportunities. This is continuing up. So at least we're making sure that this trade, this winning trade, is not going to turn into a loss. That's always number one. This is reacting to this resistance. This candle, if this can close above, then we likely will get filled. It's breaking the low. The next question would be, do we want to get out of this trade right now? Okay, see, it's breaking the low of this bull candle. If you anticipate a pullback, that this is coming back down, depending whether it's only moving to down here or it's moving all the way to down there, we might as well close this trade. So things I'm looking for, on the 5 minute we have a good range. I do know on the 15 minute we have a strong rejection. So because we have a strong rejection, we'll just get out of this trade. I'm happy to leave a couple of pips here on the table to not get them, but we'll just close, secure this position, and we'll wait for another trade. Because this has been an extended move, it's very likely that we will see a pullback, and I simply do not want to be in this trade while it's coming back to the entry and then having to get out of break even. So that's something we want to avoid. Let's skip forward this couple of candles. So you had a candle closing bearish. Now one option is that this is going to continue up and it will bounce off this support, or it will break through. We don't know. It's breaking through. Now if it's breaking through, chances are our next level is going to be down here. So let's see what's going to happen. Price is starting to move down. See, we have 1, 2, 3, 4, 5, 6 bear candles. Price starting to move bullish again. It almost moves exactly as anticipated. Yeah, and see, now it's coming up. And now we could have gotten filled. Let's wait for the next candle. Yeah, we could have gotten filled. See, but this is really something we have to understand, that it's about knowing when to stay in a trade, when does it make sense to get in, obviously, and when does it make sense to get out? Because sometimes it's better to stay in a position, allow the market to move, and other times it makes more sense to get out, even if maybe the risk reward ratio is slightly less, but we know there's a very high probability that it will pull back. There's a high chance that this will come back down, and if it gets close to our entry, then we would have to get out at break even. And we most certainly always want to avoid a loss. So that's why we've gotten out there. In hindsight, yes, you could have let this open, and it did not exactly reach the entry. But some guys would have gotten out here almost exactly at break even, and then see this turn around and it continues bullish. Now this may be another opportunity for us as it's breaking. Let's remove some of those levels again. Delete, delete, and delete. See, we had this resistance. Price has broken through. If this is a pullback, we can anticipate to maybe get in early. This could be scaling in. If we look again on the 5 minute, 5 minute is still moving bullish. We do know that on the 15 minute we had a big rejection candle, but that big rejection candle on the 15 minute has actually been, the market is making a new high. Well, let's see how much room there is for price to move up. Okay, so some of our levels potentially react to there. We definitely have a level of interest up there. This has been our previous resistance. And now if we go back to the 5 minute, let's zoom in on the 5 minute. So on the 5 minute, we could take a buy now, but our stop would be down here. We would have a reasonable, risk reward ratio. Not so much of a scalp now, however, and I would like to focus on some scalping trades today. So I will wait for a setup on the 1 minute. I will not be taking this trade. So let's skip forward. We'll skip forward here, and my price is rejecting. See, it did break again the high, which means with this breaking this high, there should have been bullish momentum to push this higher up, because we already had this small retracement. Now, if this candle is closing bearish, let's wait and see. Yeah, this candle is closing bearish. This now means it's rejecting higher prices. So bears are trying to push the price lower down again. And this now can be an opportunity for us, if you're breaking the low of this bear candle, to take a sell. Question is, how far can price move down? This would be our target. See how we all come back to the previous steps, to the previous levels. We had a resistance here, it's turned into support. So now if this is breaking below here, this is going to be my target. Let's see how many pips we have. We have about a little bit more than 5 pips. It's a bit on the low side, but still possible to take a trade. Now this is going to be, since this candle is already closed, another sell stop. We'll be using a sell stop. Place over there, stop goes above the high of the rejection candle. Entry as soon as it's breaking the low of the bear candle, and we'll get out right about here. Now let's wait and see. This is no longer valid because price is rejecting. Unless there is going to be a consolidation, few moves up and down, maybe a range to form, then this would be different. Because if there's going to be a range, then there's going to be potential that price can continue up again, all the way up to our yellow resistance we had on the 15-minute. But as long as it's respecting this high and as long as there is no consolidation, my bias is going to be bearish. So all we have to do is wait and see if we are getting filled or not. And if we do get filled, we actually have quite a few opportunities here to manage risk. Make sure we're losing less than 1%. So let's wait. Let's wait. We can actually skip forward. I'll skip forward here a candle. See a rejection candle. That's pretty good. Another bear candle. Excellent. Okay, now we've gotten filled. Price has closed bullish. What do we have to do at this point? I'm sure a lot of asking these questions. We took a sell. We got filled. Candles closing in the opposite direction. Now, the obvious level is those highs. So I'll be managing risk. If we're breaking above those highs, then I will get out. Now I can move my stop down. Let's move the stop down. Here, our stop loss. Add a new stop loss. We'll do our visual mode. Just a couple of pips above here. And again, we are cutting our risk from $50 to about $30. If it's breaking above those highs, chances are very, very high that this will continue bullish. As long as it's respecting those highs and price is staying below, then there's a high chance that price will continue down, which is exactly what's happening now. So if it's breaking this low again of this bull candle, we could almost add another position here. We could add another position. Actually, that's a good idea. So this candle is now rejecting again. I would like to see another bear close. I would like to see another bear close. Let's wait for this next candle. See, I'm not taking a sell. Now the only level where I would be interested in taking a sell is right here. And change this color to a thicker line. If it's breaking below those lows. Because those are rejection candles, they are rejecting at this level that's a support. We are still in this trade. I'm happy to accept the loss as soon as price is breaking above those highs. But as long as we're still respecting those highs, the overall outlook here is still more bearish. Because we had this extended move up, a little bit of a pullback, strong bearish rejection candle. But we need to have price move down and break those lows. otherwise we cannot add to this position. So we may have to wait for a few more candles here to close. You can see the time is 2:30. That means we're getting close to the actual London Open, and the 5 minute, 50 minute, let's see on the 50 minute. 50 minute is starting to move down. Then we'll focus. Okay, pause. Yeah, let's pause this. Okay, let's see what's happening. Price is now starting to move down. You see how this candle has closed bearish again, just the way we want it, and it's breaking below those lows. So I'm going to add another position. Now I have already moved the stop down from our initial entry. We're risking 0.5%. Now if we do get stopped out, we're losing $30. We do not want to risk more than 0.5% on a $10,000 account. That's $50. So if we're risking $30, we can add another $20, which would be the equivalent of 0.2%. So I'm adding another 0.2% with a sell. I'll sell the market because we have a valid signal here. So let's take a sell. Stop goes above, same level for the exit as well, and beautiful. Now we have to wait and give the market some time to move. See, because worst case scenario, if this continues up and we do get stopped out, we are still following the plan. We're only potentially losing $50 and not more. Most people do those calculations wrong, but it's very important to always do that. So this candle still see prices close below. We have a little bit of an indecision candle, but nothing to worry about at this point, unless we do get a bullish close above this area. Let's say if we get another candle closing bullish somewhere up here, then I'll get out with maybe half of the position. All right, so we would like to see price may react a little bit to this resistance we had here, turning into support. But as long as price is below our level here, there's a lot of room for this to continue down. At a rejection candle, large lower wick on this bear candle, but even though it has a large lower wick, it's still respecting the high here, still below our now, which should be a resistance, breaking the low of the previous one. Beautiful. We have another rejection candle, still nothing to worry about. So we're breaking the low again. We have a small gap down. Now this would be the level to adjust our stop, which we will do. So we'll move the stop. See, we're running in profits in our first position, $37.14 on the second one. So while I will move the stop goes to above this line, which is right there. Now we're only losing $7.50. So the same with the second position. Also visual mode. And we're only losing $9 if we get stopped out. Okay. Now we have to wait. Now this is a crucial time because it is going to be testing your patience. The market will test your patience, and there's nothing to do, absolutely nothing to do, while price is still within this area. If this is starting to move bullish and it will break for whatever reason, it will start breaking above here, then I can manage risk. Like I get out at break even here on the second position. But as long as it's still in this range, we're giving this time, we're waiting, because we know the probabilities. We know the probabilities of the market. This candle is closed bearish, a little bit of a lower wick, but it's only one candle, nothing to worry about. You can take a look on the 5 minute. See, this actually aligns again very nicely with those previous levels we had on the 5 minute at a support there. So we're anticipating this to retest this support. Go back to the 1 minute. Small bull candle, so respecting the high, fairly big upper wick compared to the size of the body, and our positions have gotten filled. Now you see this actually continues down, has so much momentum. We could have left a position open here, but we're happy with this. No, we're not being greedy today. Actually, we're never going to be greedy in the market. And we've gotten filled. Price moved exactly as anticipated, reached our target. That's beautiful. Absolutely beautiful. So we are approaching really the London Open. We have only a little bit of time left here. There's obviously no sell I'm taking because we just were in a sell. And in order to take a buy, price would have to move above this level again. And then maybe we could anticipate a move up and retest that level. That's just an idea on what we could expect, we could anticipate here, but we would need to close above. Let's see if we do get a close above or not. We would need a close above. Okay, we need, still waiting for this 1 minute to close. Let's see on the 5 minutes. So the 5 minute has closed with a very large lower wick. Very large lower wick. You see how this candle is now moving down? Does not yet have an upper wick. So this is going to be the creation of a lower wick here on the 5 minute. Price has actually moved down to this next lower support. You can again see it aligns very, very well with this resistance. It then has turned into support and is now here turning into support again. So it was a support there, and now we had this other rejection in the same area. So I'm looking at this on the 1 minute. Now let's see on the 1 minute, if you're breaking the high of this bull candle, okay, they're breaking the high of the bull candle, beautiful. Let's see what our risk reward ratio would be. A little bit less, but I can manage. We have lots of room to manage this, so because of experience, we know if you have a room to manage it and you know you can get out with less than 0.5% loss, we can still justify taking this one. So I'm taking another 0.5% position. It will be a buy. Stop goes below here. See, we're risking $50, anticipating this to move up there, and excellent. So now we are waiting. This should continue. Price should stay above this area, above 108.710. Because you see this candle has closed above. Very nice level we have. Very, very nice level. So price has to respect that. This should turn into support, and we should anticipate momentum up here. Now those trades that go in the opposite direction of your initial position are usually a little bit riskier because it means you're almost selecting lows and tops depending whether you're in a sell or a buy. But because this is a nice reaction to the support level, this makes sense. It makes sense. Now it would also make sense for us to manage risk if this candle is breaking below. Let's zoom in here. Okay, this should not close. We have 2 seconds left. All right, this candle has now closed. I'm getting out of this trade. See, because candle has closed, it broke and closed below 108.710. And that should not be the case. So we will accept a $30 loss. There we go. This is closed and this hasn't worked out. So we accept this and we will wait for a new opportunity. This was a nice setup actually. It looked very promising because we did have a nice range. Was bouncing off the support here. We had this support that was broken. Looked like it's turning into support again. But the market is always right, and our job is just to react what the market is showing us. And here it has showed us that the price is coming back down below this level that should hold as a support. So if that's the case, it means our buys are becoming invalid. Now it doesn't mean I'm taking a sell, because if we look to the left, we have a lot of rejections here. So this is actually a zone here you have to be aware of. So I'm not looking at taking sells unless price is breaking below that zone. But if I look on the higher time frame, 15-minute, yeah, see on the 15-minute, it would make sense. In the 15-minute, maybe we can take a sell once we're breaking above 108.646, because I have a nice range there. That's something we see on the 15-minute. But we are scalping on the 1-minute, so I want to see what's happening on the 1-minute. So it is here is a zone where we will not be taking any trades. So we will not take any trades. So far, this looks like a higher low, which is actually very good. So maybe we can give this another chance. I'd be happy to take another buy if it's starting to move up here again to get another break and close above 108.710. But we need to wait for that candle to close bullish. So that absolutely has to happen first. We need to get a close above that level. Okay, so let's skip forward maybe to the next candle. One more small candle. Zoom in, see this better. See small bullish candle, small body. It's an indecision. Okay, price has now broken below the support and below the low of the previous candle here that has rejected, but we know we're still in a rejection zone, so I'm not taking a sell. So we're not taking a sell here. We'll just skip forward a few candles. Okay, bulls are picking up again. Bulls are getting some momentum. You can see the time, it's London open time. That means volume is coming in. Now if we know there's volume coming in, let's look on the 5-minute. 5-minute has already made a lower wick. This is actually beautiful. So the 5-minute, you see prices moved down, it broke below those lows, was the creation of a lower wick. This candle is respecting this resistance, now support area. See, this is holding as a support. This area here, nice support. This should give it momentum to continue up. Now on the 5-minute, our target could be up there. If you look on the 15-minute, actually this aligns. 5-minute, let's look on the 1-minute. Yeah, we could actually move this, we could almost stretch this a little bit and get another pip and a half up. So I would like to see price breaking above this zone. So we'll play this, wait for price to continue up. Because now I'm happy taking a buy. Let's check our levels here. All right, our risk reward here would be slightly negative, but we should have an opportunity to manage risk so we can keep our stop a bit closer, depending when the 5-minute is closing as well. So the 5-minute has already made a lower wick. It's now starting to move up. Starting to move up. It's breaking above those highs. All right, you see it's starting to break above those highs, which now means I'm taking a buy. So the time is 54. We'll wait for this candle to close. Maybe we missed this move, but it's worth waiting. Because maybe this candle is rejecting. We don't know. We have a few seconds left, only about 5 seconds. I will wait for this candle to close. And let's see, there we go. Candle has closed very nicely above. So we have this close above here, which now means I can put the stop below here, and our risk reward ratio is going to be in our favor again. So I'm buying the market, the same 0.5% risk. Stop goes below here, below the previous candle. Take profit, just a couple of pips below our resistance, and we will let this run. So we should get this momentum. Now it's going to be the same story. If price is starting to move down again, if for whatever reason you see price breaking below this area, I will get out. So we're only in this for 1 minute, and let's see, we're so close. I'll just close this trade. We had a very nice profit. We're about 1.5 risk reward, and close this. See, we're up $75. We were risking only 0.5, so we were risking $50 to make 75, and I'm happy closing this. See, this is a very nice example of what scalping is actually about, because you're in and out of trades very quickly. You can see it has not even been 1 minute with us being in this buy, because we are capturing the momentum. It's about knowing when to expect momentum, when the market price is approaching those key levels, and we want to get in and out very quickly. If it doesn't work, if it doesn't move in our direction, we get out. I'm happy to accept the loss. And I think, okay, that's it for today. I think the time is up here. We will pause this. We'll continue with this session next time, our next group session, which is going to be this Sunday. And do a quick recap before we finish up. Let's do a quick recap. See how many trades we took. All right, you can see obviously your trade frequency is a lot higher if you're trading on the 1 and 5 minute than if you would on the 15, 30 minute, or even on the 1 hour. So we started off here, had a couple of nice wins. We actually only had 1 loss today. We were able to manage risk though. In the previous positions, we got out on the first one a little bit earlier. So we took a sell. Here we got out. Yeah, our risk reward ratio was less than 1 to 1. But we anticipated this pullback. So because we anticipated this pullback, we made the call to get out of this trade, which was a good decision. I'm happy with it. Then we took a sell. We added to the position with another sell, while still following our trading plan, risk management rules, and we made sure that our risk is not going to exceed 0.5%. So our first sell was 0.5. We moved the stop to 0.3. Then we had another 0.2%. So overall, we were maintaining 0.5 and moved very nicely. Moved actually a few pips more, a few pips past our target. 3 pips to be exact. So it moved another 3 pips further, which is okay. But we had a good risk reward ratio here. Then we took this buy. We had this breakthrough. We had a little bit of a confirmation, small confirmation here. Price moved in the opposite direction. We accepted the loss and got out, which again was the right call, because you can see at that time our stop was below. So our stop was below this candle. Had we not gotten out sooner, we would have gotten out later on and actually get stopped out here just before this turned around again. So as this has moved down on the 5 minute, this has turned into a rejection candle. Price started to move bullish. We knew we were approaching the London Open, so there was a lot of volume to anticipate, which is always the case. And as soon as we had this break above, took another buy. Beautiful, beautiful move. Moved exactly to where we anticipated it. Now it did continue again a little bit higher, but we've been up 1.5, and this has been a very, very nice move. Took less than a minute. So overall, this is a good time to, even on the live market, to call it a day. Took a few trades. I mean, we made 2% in 1 day, just with scalping here. I'm very happy with that. Similar results we can see in the live markets, but it's all about knowing when to trade, when not to trade. And I hope this was helpful, guys. I was able to take some notes, and we'll see you next time. We'll see you next week again. Take care, everybody, and trade safe.